Good afternoon. This is Chris Brecher with Brecher Trading. Funny, happy Valentine's Day, everyone. But funny, it's February 14th. See this? The reason I say funny, I did this headline 3 hours ago. Too much bearishness leads to another rally. And I'm going to show you how I measure my bearish sentiment. But today was a very interesting day because what happened was you had a bad CPI report, but we all knew it was going to be bad after everything I've showed you with FinViz. The put-call ratios were way too high in here, so keep that in mind. I don't know what that just was with PowerPoint, but the put-call ratios were too high. The sentiment, negative sentiment on StockTwits was too high, and I'll go through step by step of how that worked. But what I wanted to show you in here, by the end of the day, very interesting. You had the ES is up 36.50. This shouldn't come at too much of a surprise. We rallied right to this resistance. This is what, through my 37 years, these type of days are the days when I usually don't do as well. Because what happens is the bonds are down, the divergence is still there, and I'll go through that in a minute. But you're working off the oversold, but you haven't turned back down. I have a habit of getting short too early in here, and luckily I warned all our subscribers not to get short, and I'll show you the reasons why in a minute. But the idea is that bonds are near their low now, but you got a lot of positive news after the close. You had Cisco with good earnings, then you had Apple, that Warren Buffett increased his position. That only made it go up another 30 cents, but you know now why it's been up for days, even when it hit resistance. And we'll go into all this. So first thing I want to show you in here is FinViz. All we did today is play a little bit of catch up, but I'll tell you right now, before I go to FinViz, I just remembered something. I showed everybody this chart on the opening. We're showing that the Nikkei was in the lower rung. I can't tell you how much correlations do work. What am I talking about? The Nikkei was in the lower rung on a daily chart. It's hardly bounced. Today it was down 250 right on the opening. I warned everybody, watch the Nikkei. If the Nikkei starts bouncing, then we can bounce. Look how similar all these charts are. So I want to go through one after another after I show you FinViz. So the first thing in here is the overall market. As you see in here, when we go to futures, and you go to the charts, you're going to see that all we did was these reversal candles. Now, you might say that's a W pattern. I don't see it yet. I see a V sort of in here. But all you're getting in here is a nice work off of an oversold condition, basically retracing at least 50%. Now, the next thing is, and I put it on the morning charts that I'm posting on, that, I'm compiling, is price resistance is a lot more important than moving averages. I'll show you both in a minute. Russell finally having a rally in there from its doldrums. VIX finally falling apart in here. Remember, record longs in the VIX. It's about time it got pounded in here. Crude oil finally having a nice day. Where did it have a nice day? You can't make this stuff up. When I tell you that support, things hit support, the price support matters, well, it matters. So that lended, the resource stocks definitely lended a bid to the overall market. Same with gold, up over 20 in here. This is what I want you to notice. If you're wondering why bonds closed on their low, look at copper, look at corn, look at soybean meal. I mean, these things are just going bonkers. This is bad eventually. Look at soybeans, new yearly high. You have a number of things going up, and you have the bonds getting crushed. You get the notes getting crushed, and you have the dollar testing its low. You might be like, well, why wasn't the market overall down? This is why. Go into StockTwits. I love going in StockTwits. I have a ton of followers in there. And go and check out the SPX, which was 80% positive a couple of weeks ago. It got down to 33% positive yesterday. Go into the ES. As you see, they're starting to slope, but there's still more bears than bulls. Go to the ES. Let me see if I'm telling the internet what to do. It doesn't listen to me. It's sort of like Alexa in here. This was 35%, is now 45%. It's coming back, but it's still bearish. IWM was 86% bullish. Let's see where it is now. Survey says It's working too slow, StockTwits. But it got down. There you go. Look how this has come back from 45% to 58%. So we're getting that in there, which is good. Look at the Qs. This is the NASDAQ. Now, there's a reason I'm showing you all this that I think is really important. Let me get the NASDAQ up here. Like I said, another survey says it's probably back up to 60%. Yep, 60%. Got down to 48%. It's all about extremes when you look at sentiment, and the sentiment got to where it was too extreme to the downside. That's why we rallied no matter what. But I also want to show you this, very important. Go to the futures on the left. See the P call? See these? This one, and I'll go and show you with futures so you could see what they all are describing. I'll do this slowly in here. Notice the put call in here. Put call ratio for the Russell, for the NASDAQ, for the S&P, and for all options. That's the one I look at the most, the PCAL. See that right there? And I want you to realize that when it's over 1, usually the market rallies. The NASDAQ, if it's over 1, usually the market rallies. I warned you about that. Go and look at the put call ratio this morning. Let me put it up here. That's the NASDAQ put call ratio. What a dramatic change from yesterday morning. I warned everybody when the NASDAQ was down 30 that it was going to be up because the put call ratio was 1.2. As you see on a daily chart, that's very extreme. Look at it this morning. Got up to 0.9 when the initial reaction was down on the unemployment report. The NASDAQ was down 90 at one time and closed up 122. Massive reversal. The thing is, the Amazons and the Googles never look bad today, and Facebook, and they pulled everything up, and of course Apple. But the idea is the put call ratio was too high. StockTwits sentiment was too negative. That's why we went up even with a negative bond market. But now let me show you a bunch of things I'm looking at. Number one, luckily, I showed everybody this chart of the ESs on the right, and on the left, whether it was the Nikkei, whether it was the Russell, what happened, or the NASDAQ, is what happened in here is this busted through the old high yesterday. See that little resistance? Before this did. So you had more than enough chance to get you out of a mess. That's all I mean in there. It was more than enough chance. The next thing in here, a lot of times these things are symmetrical. That measures about 40 points. I'm going to round off. Could be even more. 40 points gets you to 27.05. Now, the maximum in here, if you take it exactly, is really about 42 points from 26.75, gets you to 27.20. Why is that important? And I'll show you. This is where I find things absolutely fascinating. Go in here. And price support and resistance is always more important than moving averages. I've been warning about the SPX going to its 49. Now we're going to put the ES on the right, which is a 24-hour chart, and we're going to put the SPX on the left, which is just during market hours. Both of them have the 49 that's coming up to, and that's a 50% retracement. I warned you about 50% retracement. No, nobody believed me this morning when bonds were getting tattooed. If you're wondering what I'm talking about, you go from here to here, and that's 50%. But I care more about price support and resistance. The other thing, though, is this. We're working off the oversold, and as you see, the blue line's way below zero. We're probably on the red line going to hook down eventually. But this is how it usually happens. You usually get a reversal candle on the bottom, and then you get a reversal candle on the top, and then you can short, but we don't have that yet. So just keep that in mind. But let me show you all the levels of support and resistance. First, SPX. I'm going to take this on an hourly chart. Think about where everybody got stuck. Right there. That's where the real washout was. We rallied right back to the underside, and then we washed out again. That's going to be the major support. The thing is, with the SPX is a little different than the ES in that this measures about 27.15. The other thing I want you to realize in here, go and look at a 1 hour chart. You'll see it. Now you can see what I'm talking about. That will really work off the oversold, number one, and get us to overbought. And also that measuring objective on a 15-minute gets you up to that level. It's just beautiful, this kind of symmetry in here. So you get that inverse head and shoulders, and it goes right to the resistance. That's what you're going to be watching in here. And like I said, I hope I saved you on some of the stuff with the negative sentiment and also what was going on with the busting up along certain things. Now, the other thing I'm going to be watching, and I love this in here, is go in, and this is a great link. I'm just going to leave it up for a second. I like Charles Rothblatt, what he does on StockTwits of posting the AAII investment sentiment. Let me put this up here. Not the best TV shows. I put up the wrong thing. Barron's Market Lab. But really, my links are really boring. Look at all these. I have the best TV shows on Amazon. I have all my stock stuff, stock buybacks, medical supply stocks, insider trading headlines. I am the most boring person with my bookmarks. It's really sad. But this is the thing. Barron's puts this out every week. Now, Charles Rothblatt for AAII is nice enough to put his part out on StockTwits every Thursday morning. So I'm going to tune into that. But this is what I wanted you to see. The bullish consensus started going down a little. The American Association of Individual Investors, which is what Charles does, last week went to 37. This is a pretty good tell. Market vein went down. TIM group market sentiment went down. I don't know when this one, and this one update, but this one updates Thursday morning, so keep that in mind. I'm going to be watching that with a hawk, like a hawk. That's number one. Number two in here is I'm watching this carefully in here. I know a lot of people wanted to short today. They were begging to short, watching the bonds and getting their heads handed to them. That's how you work off an oversold condition. Is what happens is you get this worked off, you get something unexpected of the market rallying with bad bond market, and now you wash out all the shorts. That's what you want to see in here. So what stocks are we going to trade? The first thing is, because everything is moving with the indexes, you have to wait for the indexes to get up to their objectives, which they're close. And then what you're going to want to do is this. You want to see the ESs, let's say on a 15-minute chart. You can see this. They haven't done their objective yet. You want to see it get up to these resistance zones. And as they're getting up to these resistance zones, there are already stocks rolling over. That's my favorite thing to do in here. So like Citigroup, you don't short it yet. It didn't look bad yet. Is there going to be a place? Absolutely. It's just not yet. Whether it's Citigroup, whether it's GM, what are you noticing down here? And like I said, I used to get these charts called the SMR charts that all they did, I was paying through the nose to get them delivered on Sunday night with Federal Express before computers. All it did was the 31016 MACD. And one of their favorite sell signals is when the red line is over zero, the blue line's under zero, the price is under their 49 EMA, and then the red line hooks back down. That's the problem. It hasn't hooked back down yet. You get your head handed to you if you try to anticipate. On the other hand, if tomorrow we see the ES is on the right, getting up to that resistance zone and sort of doing that, but we're watching the Citigroups or the GMs of the world starting to roll under here, you can see what I want to do. And now you see when to short. Don't short yet. Wait till it gets under all these moving averages. I put all of them up here so you could see where they are. When it gets under there, there'll be more than enough chance to mess around on the downside. Now, you might say, how about the upside? I think the next couple of days, we still look at the takeover stocks. The Xilinx, which acted beautifully today. It just consolidated the rest of the day. Maxim, same thing, consolidated today. Mattel, I think, will start kicking in tomorrow. And then Netflix, which got battered the end of the day, I think Friday morning is going to be one of the stocks we need to watch. Those are the bullish ones in here. The things like GM, they've worked off their oversold condition on a daily, and now they're at resistance when the overall market is going to get overbought at resistance. We need to look for shorts, not longs. That's why yesterday when I showed you short ideas and ledges, they hadn't broken down yet. You don't anticipate them. You wait for them to roll over. And because the whole market zoomed, the probability was they were not going to go down yet. So my thing is, I'm going to be watching GM. Even though Warren Buffett increased his stake in Apple, Apple is finally way overbought right at resistance. You got to watch Apple, even though who knows if it's going to go down with Warren Buffett. Cisco had better than expected earnings. It's above a new high. So you don't touch Cisco. I told everybody not to touch it. It's been in an uptrend already. Never got it under longer term moving averages. So I think we watch Apple still. The banks, you don't touch them till they roll over. What else am I going to watch? Well, Roku, I have a butterfly. The stock acted great in the morning and then just wimped out by the end of the day. I'm not sure what this means. I think I'd rather stick with more liquid stocks. And let me show you some. Lennar. That's one I want to watch. Does it look bad on a 5-minute? No. On a daily, it's finally working off its oversold condition. This is where I'm going to look for Lennar. 56, 72, 16 points. Add that to 56, you get to that 64 level. That's where the high was on the earnings. See that candle? That's where we want to look for shorts. Because if the bonds are still down, the reason you shorted these stocks in the first place is still in place. So those are the type of stocks we're going to look for in here. Whether it's Lennar, whether it's like the American Expresses, because debt's going up. Look where you short this stock. We're getting there. Do you short it yet? No. Look at a 15-minute chart. It just isn't time. If the whole market's pulling up, you don't mess with it. Now, tomorrow is one of the rare days that I might trade the index also, because the index on a whole is getting overbought. I like the idea of trading individual stocks, so that way if the market gets away from me on the upside, I can always cover the stocks at resistance. So I hope everybody's enjoyed this video. I'm really excited about the next couple of days. Have a great night, and I will talk to you later.